Well, Zillow did it yet again. They revised upward their housing market forecast for home prices nationwide this year. They cite tight inventory levels as the main reason for this upward revision in their forecast for home prices, despite affordability challenges that home buyers are facing right now. However, even though they're predicting that home prices are going to increase this year, they are also forecasting that home sales are going to decrease to a 13-year low this year. So in today's video, I'm going to share their latest real estate market predictions and also share some context regarding what is needed in order to get there here. And of course, I'll share my opinions regarding whether this is bullish, bearish, or on par with also my expectations as well. So let's go ahead and dive right in. I appreciate you guys for joining me in today's video. Here's Zillow's forecast here that was just posted a couple of days ago. It says Zillow's forecast of the nation's typical home value. So they're only looking at home values and not based on the median sold price like a lot of other companies such as Redfin and CoreLogic looks at. So their forecast for home values was revised upward this month as tight inventory conditions continue to place upward pressure on home prices despite persistent affordability challenges. So I want to break this down regarding inventory levels and also affordability challenges. So regarding affordability challenges, in my video I posted 1 or 2 days ago, I stated based on my own analysis of the National Association of Realtors data that housing affordability is at the lowest levels going back to January 1989 as far back as NAR's data goes. So housing affordability is at all-time record lows as far back as 1989. Just absolutely crazy. And by the way, that report was based on June's average rates when rates were around 6.8%. But today, at the time of filming this video, rates are well over 7% for people with exceptional credit. So that's regarding affordability challenges, which I talk about on the channel all the time, right? But regarding tight inventory conditions, here's the latest we have from Realtor.com. The latest we have is actually through July this year. So for July, there's around 647,000 homes for sale, slightly above to start the year at about 600,000 homes for sale. So inventory levels have only increased by about 40 to 50,000 this year so far. Compare this to last year, we're actually down by 6.4%. But more importantly, when looking at pre-pandemic levels, the blue line here is 2017, the orange line's 2018, and the red line here is in 2019. So in comparing current levels right now at 646,000, this is well below pre-COVID levels in the range of 1.2 to 1.3 million homes for sale. So when Zillow cites here that we have tight inventory conditions, historically speaking, yes, that's entirely true. We have approximately 50% fewer houses for sale right now compared to pre-COVID levels. So here's our housing market forecast for home prices this year, because they're expecting to end the year up by 5.8%. That's an upper revision in their last month's forecast that was posted a month ago, of course, which called for a 5.5% increase in home prices in 2023. They also cite here that home values are predicted to rise by 6.5% from July 2023 through July of 2024. To me, their prediction regarding home values to increase by 5.8% seems a little bit lofty in my personal opinion regarding trends we're seeing right now. Of course, it all depends on how many people list their homes for sale for the remainder of the year, and of course, the direction of rates as well, because rates have been absolutely skyrocketing this week. So regarding home values, a gain of 5.8%, let me give you guys some context about where that would get us by year end. So I want to look at Redfin's data center. They actually look at not home values, but they look at the median sold price here. So to start the year, the median sold price in the US was $349,000. So 349,000 times 1.058, that's an increase of 5.8%, right? That would land us at around 369,000 by year end. right about right here, which let me just include 2022 here. So by year end, we would land about right here at around 369,000. To me, this seems a little bit lofty because right now, for the 4 weeks ended August 6th, we're at 381,000. So this would assume that home values would only decrease by about $10,000 for the remainder of the year, which in my personal opinion seems a little bit lofty because interest rates right now are so very high, or very, very high right now, which should impact home buying demand, which should impact inventory levels, which also in turn should impact home prices as well. I don't expect to see home values decrease at the same rate we saw last year. And that was because inventory levels were skyrocketing, and of course rates were also skyrocketing as well. Whereas this year we have slightly higher, more homes for sale to start the year, whereas last year they saw a giant increase of inventory levels. Of course, a lot could change though, and I'll definitely keep you posted, but that's just my personal opinion regarding what we're seeing right now. But having said that, our housing market has a ton of challenges right now, especially regarding rates at around 7.5%, which is of course absolutely insane, right? But of course, please leave me a comment below with your thoughts regarding your real estate market predictions for home values for the remainder of the year. All right, so let's get back to Zillow's real estate market predictions here. It says just over half as many houses were listed for sale in July compared to the same month in 2019. I believe they're talking about housing inventory or the number of houses for sale this July compared to July of 2019, which is correct. We have around 50% fewer homes for sale compared to 2019's levels, as I shared with you guys. It also says here that we have around 29% fewer new listings. This is when a home seller lists their house for sale. So right now, approximately 29% fewer new listings entered the market this July than is what is expected, historically speaking, during pre-pandemic levels. So let's actually look at that. According to Realtor.com, for the month of July, we had approximately 374,000 new listings. Compare that to pre-pandemic levels, we had around 525 to around 540,000 new listings. Therefore, right now we have around 30% fewer new listings compared to the average 2017 through 2019. And that also corroborates what Zillow had to say as well, down by about 29%. They also said here that houses that went under contract or went into pending home sale status this July was at 12 days, a week and a half faster than was typical in 2018 and 2019. This number right here at 12 days is a lot faster compared to Realtor.com as well as AltosResearch.com, which are both reporting days in the market at around 40 to 50 days. So I'm not too sure why they're saying here days in the market's only 12 days, but one thing I think we all could agree on, and this corroborates data from Realtor.com as well as AltosResearch.com, is that houses right now are selling slower compared to last year, but they're still selling faster compared to pre-COVID levels. So for example, according to Realtor.com, days in the market for July was at 45 days. So houses taking about 11 days slower to sell compared to 1 year ago. However, back in pre-COVID levels, days in the market was in the range of 55 to around 60 days. So houses right now are selling faster compared to then, but still selling slower compared to 2022 at this time. Zillow also provided their forecast for home sales this year of existing houses. It says tight inventory conditions of existing houses and high rates are expected to limit home sales this year. They are expecting 4.2 million home sales of existing houses in 2023, in line with the previous forecast here, which would represent a 17% decrease from last year's levels. One thing they do not mention in this report here is that at 4.2 million, that would be the lowest levels of closed home sales of existing houses going back to the year of 2010. But don't take my word for it, right? Take a look at this. So here's a download I pulled from the National Association of Realtors website here. This is the number of closed home sales each and every year, which goes back to the 1980s, I believe. So Their forecast is at 4.2 million. The last time we had closed home sales that low was way back in the year of 2010, when back then we had 4,190,000 closed home sales. So therefore, their real estate market predictions for 4.2 million would be a 13-year low of home sales this year, and also a decrease of 17% from the 5.03 million we saw last year. Additionally, I just did some math regarding this, is that at 4.2 million, this would be a giant decrease of 31% from the 6.1 million we saw just 2 years ago. I also want to discuss how reasonable their forecast of 4.2 million is, based on the number of closed home sales so far this year and what is needed in order to get to 4.2 million. So I actually made this Excel formula here, or Excel spreadsheet here, because of course I'm a real estate market nerd here, right? So I actually looked at non-seasonally adjusted existing home sales per NAR. So for January, there's 231,000. And you can see here, I plugged in each and every month through July, which is actually the most recent data we have from NAR at 372,000 to start the year at 231,000. Again, not seasonally adjusted. So this means that so far this year, we have 2,409,000 closed home sales of existing houses so far this year, right? But the forecast is at 4.2 million. Therefore, we need approximately 1,791,000 more sales for the remainder of the year. This is August through December this year, or about 5 more months. Therefore, on average, we need 358,000 per month through December this year. In my personal opinion, this seems a little bit lofty though, because at 358,000 on average through December this year, this would only be slightly below July's pace at 372,000. For me personally, I'm expecting that closed home sales are going to be lower than 4.2 million because due to the rapid rise in rates, and of course due to a decrease of new listings hitting the market as well. I would expect to see more in the range of around 4 million closed home sales this year. And that would put us at around 318,000 on average for the remainder of the year per month. So for example, if I change this to 4 million for their forecast, again, that'd be about 318,200 on average for the remainder of the year. But please leave me a comment below with your thoughts regarding this, and also leave me a comment below with your real estate market predictions as well. Do you think that Zillow is accurate regarding home values increasing by nearly 6%? And home prices or home sales to be around 4.2 million this year? Please leave me a comment below. I appreciate you guys for watching today's video, and of course for supporting my YouTube channel as well. Please subscribe if you haven't done so already, and also like and share this video as well. Hope you guys have an awesome day. I look forward to seeing you in the next video.